Hello, hello, hello. Happy day. We are alive. We're breathing. This is your founder, your host, Joshua Taylor of Break Into the Future. We breaking in all things future, focused on crypto and on blockchain for series one, season one, volume one, whatever you want to call it. I have a very special guest, an awesome crypto OG, blockchain OG, maybe a legend, Santiago Velez. What's up, man? What's up, big bro? How are you doing?
I'm doing great, man. Thank you very much for having me. I appreciate it. Love being on. I hope we can nerd out this for an hour, be a casual conversation, but let's see what we touch on. There's so much to talk about.
Yes, an hour is not enough, but we're gonna make it worthwhile for the breaking gang and for ourselves. The
Mm.
people always want to know. People want to know. That's becoming like a thing. Who are you? Your origin? Where are you from? How did you get to this point? Your whole how did you break into crypto? Your blockchain story. How you went down your rabbit hole. Just give us the whole nine.
Sure. Well, I mean, I was born in Colombia, but I immigrated to the United States when I was three. I grew up mostly in New England and presently live in Massachusetts. I went to school for nuclear engineering, graduated in 2000. I was in the power generation field for 20 years. I did nuclear engineering, helped to run nuclear reactors for commercial power plants. I did a lot of work on the design side, helping build new power plants. So I've been an engineer most of my life. So for me, it's always been about, seeing a big problem, breaking it down into little pieces and helping solve that problem. And throughout that entire journey, I really never understood money. I mean, I get it. Everybody kind of gets money. You need it to live, to prosper, to invest to the future.
Mhm.
But I never really understood money. And just casually, a coworker of mine about 4 years ago said, "Hey, have you ever heard of Bitcoin and Ethereum?" And I had heard of Bitcoin. You hear that your occasional news cycle highlights, but never really thought much of it. And so I started reading about Bitcoin and Ethereum and other digital assets, and just went down this rabbit hole of what money really is. I always thought dollars were backed by something. Maybe there was gold in a vault somewhere, or it has real worth because everybody wants it. It's got to be backed by something.
Yeah.
And I came to discover that, in fact, it has a very rich, complicated history. Money has a very rich and complicated history, obviously,
Mhm.
because it kind of represents us as humans.
Mhm.
And so I went down that rabbit hole. So I started in buying cryptocurrencies, digital assets as an investment. It's like, hey, these things are growing in value rapidly. Why don't I get in on that? But the more I learned about it and how these things work, the more it appealed to my engineering side and to my problem solving side. And I just decided to kind of pivot my life into the space and work on it.
Mhm.
So, I do a lot of interviewing around it, a lot of talking around it. I prolifically comment on it on Twitter,
Mhm.
and I'm building a business on it. So yeah, that's how I got where I am.
Yeah, and I found you on Real Vision. You've interviewed a lot of people. I don't know if you were interviewing Spencer. Did you interview
Hmm.
Spencer?
Yep.
Yeah, founder of Crypto EQ. I'm going to have him on one of these days. He's actually based where I live in Houston.
Oh, nice.
So shout out to the Houston crypto ecosystem. I know Boston area where you're at is a huge crypto blockchain ecosystem. We can get into that. Um, but yeah, I was like, I have to reach out to Santiago because he interviews a lot of people. And now you're on Breaking the Future. So
Yeah, my
cool.
pleasure.
Yes. So how did it get to where you're this engineer, guru, nuclear, basically a rocket scientist? Then you get into understanding the core elements and history of money. You get your rabbit hole, you get Bitcoin, you like, I'm just gonna revolve my life around this new money paradigm and system that's being formed. What led you to starting a company around this space in like basically 2017, 18 to now? What happened and how did you grow in the space and evolve and create a name for yourself and all that?
Yeah, great question. I mean, like I said, it started with the investment, right? Like buying digital assets and
Yeah.
holding them for periods of time. But uh, some of the biggest problems I think we have in the world are, access and income inequality. I see a lot of aggregation politically. I see a lot of aggregation in companies and the way they aggregate value. So these are mega problems. These are like really big systemic problems. And I feel like the only way they're going to get adequately resolved is if we kind of decentralize and de-aggregate all these institutions. And frankly, the only technology that I see is capable of doing that at scale is distributed ledger technology, which is what underpins cryptocurrencies and many of the digital assets. So for me, I have a very strong ideology towards um, supporting any of these systems that solve these big problems. And let's take a very simple example. Like take something like Facebook, right? Facebook makes its entire profit model around monetizing its social network, right? These are all these connections that they help people build with friends and family, and then they figure out a way to monetize it with advertisement. And so, all these people are billions of people literally are generating all this data that then Facebook is able to aggregate and resell on a secondary market to advertisers. And we see the kind of the ramifications that has, like in politics, right? We see that express itself in how, maybe misinformation spreads, political opinion gets spread, and so it's ripe for abuse, right? Either by Facebook or by people who understand how the platform works. There aren't like checks and balances there. If you take that same kind of system and you decentralize it, you can introduce checks and balances. You can't cure all problems, but you can certainly introduce checks and balances that would mitigate a lot of those social ills. So I feel that's true for big aggregators, Google, Facebook, Amazon, just as much it is for as government, right? Our how dysfunctional our government is and ineffective at solving people's problems. That goes without saying, right? I don't think that's a big hot topic there.
Relax.
But uh, so yeah, that's to me, it really hits a core passion I have, which is solving problems. What is the most effective way of doing that? How do we arrive at justice, equity, opportunity for people? And these systems really seem to resonate with me in being able to do that. So it was much more important to me to get in that space and participate than it was just, I had a perfectly a great job, excellent income, benefits. It's not that I was unhappy, but this is what I'm passionate about, and that's what I encourage people to do and find is if they're passionate about it, find a part of this industry that you can join, because it's growing. There's a lot of opportunity. It's growing really fast, and you'll be a contributor to solving these big problems.
Amen. That was a great few minutes of just explaining the last few years and just going into like solving problems and what I believe every human was designed to create, was trying to do, was to create and solve problems, whether you're solving a problem for one or a few billion, right? Your scale is up to you and the God-given abilities and work ethic and all the different, there's a lot of different variables. We won't go down that rabbit hole today. Maybe we will, who knows? But I love what you said, or you mentioned distributed ledger technology. At Breaking to the Future, we want to educate as well as just have great rabbit hole conversations. So what is distributed ledger technology, and how does that distributed ledger technology, DLT, how does that solve the centralization problem to decentralization, as you said?
Yeah. Uh, okay. So first of all, the main problem that DLT and blockchains, which is a subset of DLT, solves,
Mm-hmm.
they call it the double spend problem. And the double spend problem is really a subset of a bigger problem, which is the double write problem in computer science, right? That you have all these parties or systems, they're all separated geographically or in time, and they're all trying to agree on the truth around anything, something, right? And you don't want to write something twice that is in conflict, right? You want consensus around the truth going forward or in time, so that you can make forward progress. All right. So a very simple example: Bitcoin solves the double spend problem, which is if let's say there's 21 million total Bitcoin that the algorithm states is possible, and you have one Bitcoin and you send it to your mom, you then can't send that same Bitcoin to me because you would have spent it twice, right? And all of a sudden, uh, you've cheated the system, and the system is no longer providing the function it's supposed to. So blockchain and DLT, the main function is to solve that double spend problem and more generally a double write problem. And what that does is, in a very powerful way, is it creates a common share of truth, right? Something that people can all agree on. And that's, if you think about it, one of the fundamental problems of anything, like in politics, common sets of truth and data, voting, for example, in salesmanship, like with Facebook and advertisement, who's the owner of that data and who gets to benefit from that data being sold, right? That is a type of common set that right now is problematic, right? So DLT and blockchain allows systems that are decentralized to arrive at a common set so that you don't have a double span or a double write. And when you think about all the applications for it, I mean, it goes on and on and on. It can be applied to almost any universal problem where you have counterparties, where you have people who don't know each other, haven't built trust, don't rely on a brand to transact. All of these frictions that preclude people from interacting with one another can be overcome in some part with DLT. So without getting into the technicalities of exactly how it does that, because there are many ways. In fact, there are many ways in which people solve the double spend problem. Bitcoin, for example, it uses a process called proof of work, which is this security hashing algorithm and this competitive framework it's almost like a race to see who's going to get to amend a block to the chain. And in that block, there are stacks of transactions, which represent you sending a Bitcoin to your grandma and you sending a Bitcoin to me, and keeping accounting of that globally, right? So it's like this globally shared state. So yeah, so anyway, so when you think about the technology and how it can arrive at consensus for all of these different kinds of problems, you start realizing that it can be applied to some of the really big problems that we have, right? It's applying to governance, right? So there's so much experimentation in this space. It's what I find most interesting about it, because there's so many ways of kind of skinning this cat. You can use different consensus methods like proof of work, there's proof of stake, and you can read all about this on the internet. There's all these really great places. And then there's governance models, like people who participate in these networks. They're not just passive participants. Like if you have a Facebook account, you're kind of this passive participant, right? You open your account, and whatever Facebook decides they want to do with your account, there's really nothing you can do, right? If they want to close your account or censor you or do something, you're kind of stuck, right? So you're a passive
control the platform, yeah.
Yeah. In some of these ecosystems that are being built around digital assets, you're not a passive participant. You're actually in the governance system.
Yeah.
You have a say, you have a vote, you can stake, you can decide how the protocol changes. That really inverts the relationship. And I think that inverts who has the power, the value, and who accrues the benefits. So yeah, did that kind of answer your question? High level?
Yes, it did. I love that we're going depth in this one. We can go so many ways. My brain, I'm like, which way? Every way. It's distributed. So there's so many use cases, right? And that's the beauty of blockchain. And I think it's even beyond what we're thinking. I think in every web and technological generation, there's things that we know can be used in that next generation. But the great thing are the things that we don't understand, the new jobs, the new economic benefits, the new things that will increase the gross domestic product, the GDP that's circulated. And we'll talk about that in a second. But you've been talking about government. Government has been mentioned a few times. So do you think government will be used on the blockchain in the future and allowing voting to be truly transparent? And if it's a ledger, right, that means we can see the account. We don't need to double check. There's no false voting. right? There's no, like, it's really hard to cheat, right? So why can't we just in the future all have our phones, which we were like, why isn't this there sooner, right? And we could just literally vote based off of these governmental, federal and like local governments, right? We can just literally open our phones, submit votes on this, on it's secured by the blockchain on a distributed ledger, and like we're done. Don't have to go anywhere. Don't have to go to some annoying local county voting booth, and it's just over. Do you think that's possible? And what do governments do you think? What do you think governments think about that?
Yes, it's absolutely possible. I think it's imperative that it happen. I think that a lot of the divisiveness in the country is predicated around a crisis of confidence in the in government to either reflect their views or to um, verify and make sure that their expression at the voting booth is accurate, correct. And there's a lot of controversy around that. And honestly, there's no need for that with these distributed systems, which are built and predicated around not trusting the counterparty. Because think about how a voting booth or a government ballot structure works. You're relying on the brand, which is the government, to verify that the process of you expressing your vote is going to be implemented correctly, honestly, and faithfully, and that if it's not, the law will be used to prosecute the bad guys, right? The problem with that is the system is very complicated. There's many different rules, many different states. We're a United States. It's not really federalized in terms of the rules. So there's a lot of opportunities there for people to take advantage of the system and work in between the cracks, right? And so that causes a lot of crisis of confidence in the institutions. And that's why blockchain kind of started, right? Bitcoin started because there was this crisis of confidence around the global financial crisis, all the banks kind of acting irresponsibly and driving us into crisis, and all of the things that led up to Bitcoin before that, all the technology and experimentation, essentially, it was the right place at the right time moment, right? And I think we'll see that in government too, right? That we'll get it to this crisis if it wasn't bad enough the last time, but we'll get to this crisis moment where people will be saying, look, we need a solution to this problem. And I feel that DLT, blockchain, is one solution, right? It doesn't solve all of it, but it definitely addresses this problem of I don't trust my counterparties because everything is transparent. It's open source. It's built right. It's verifiable, right? It's auditable. It's public. It's permissionless. And so there's really nowhere to complain, right? Like once you agree to participate in these rules, you can see that the other guy is playing by the rules of the game and you're playing by the rules of the game. Yeah. So as long as everybody can see that everybody else is playing by the rules of the game, then the outcome is implicit. Like there's nothing to argue about. You agreed that this is how we're going to play the game, and whether it came out the way you wanted or not is irrelevant. The rules have been executed as designed. Mm-hmm. So I think, yeah, absolutely, it's a huge. There's no reason we shouldn't be implementing it like as soon as possible. There's no technical reason. With regards to things like liquid governance, which is something I encourage your viewers to explore. Liquid governance is kind of this mixture of representative democracy and direct democracy, right? And the way that works is essentially right now we live in a representative democracy. We vote for a senator or a rep, and they go to Congress and they try to enact laws on our behalf. And so, after you voted for that person, you've kind of lost your power, right? You have to, you hope that person is going to go and represent your interests, but there's no guarantee. And the only time you really get to rectify an error is when there's a re-election. And so that's problematic in itself. With liquid democracy, you can almost take that power back real time. You can have them vote most of the time, when you're working and it's on an issue you don't really care about. Like if someone's voting on legislation around aviation, and I'm not a pilot. I mean, I might fly and I'm a consumer, but generally something I'm not that interested in. I'll just let my representative vote. But if they're voting on something like blockchain that I am interested on, I can pull my vote back from that representative and assign it to somebody else, or I can vote directly. And that's very powerful because all of a sudden it changes the power dynamics, changes how we campaign, changes just everything in terms of how we share power in the United States, and that's the crux of the problem. So yeah, I know, long answer. We went kind of a detour, but I definitely believe that would solve a huge problem in politics, governance. And it's interesting because a lot of these ecosystems, these blockchain networks where people participate in, they're doing exactly that. They're experimenting with what is the right trade-off between, we need leaders and people who are focused on it full time, making decisions around governance versus, the individuals in the network, how much power they have and can they pull their power back? And all these kind of trade-offs are being explored real time, especially in things like decentralized finance and these protocols. So yeah, definitely very, very bullish on it. I'm very optimistic on it. Most people are very pessimistic about politics, but I actually think in this particular area, it holds a lot of promise.
Yeah, that's super cool to think that we could have a more active approach in our governing body in the United States and in different countries around the world, right? We're pretty fortunate here. There's a lot of backdoor stuff we don't know about, but at least we have a lot of basic freedoms. Other places a lot more corrupt, or their economic opportunity is very limited. Do you think that, um, okay, like, so it starts with Bitcoin, right? Well, was our first, kind of real solid finite amount of money, programmable, engineered money that was put on chain, on the blockchain. Say if you, all these different types of accounts, units of account, right? So say if we had voting on a distributed ledger, would it be on the blockchain that does Bitcoin, or would it be on a different one? What do you think about the different blockchains that are out there? And can we talk about that?
Yeah. So, the Bitcoin network is a single network that allows people in that network to express value, right? That's its main function without it being spent. And some people decide to store their value there. And, one of the big narratives around Bitcoin these days is that if you buy it, it can store your value against things like inflation, right? So it'll be there some point in the future. Um, the other, but that, it doesn't solve every problem. It solves one problem very specifically. So you could have other networks that are more customized to the problem they're trying to solve. And that's what I think is going to ultimately happen. I think we're going to build a decentralized web on top of our existing internet, right? And this decentralized web will be an internet of value in which people participate in many, many different value networks,
Mhm,
depending on what those networks problems are solving. And
mhm,
then they'll all interoperate,
mhm,
right? They'll all work together with as little friction as possible. So I'll give you an example, like um, currency, dollars, right? And we talked about this a little bit offline a couple of days ago. Currency is something that we're a network of, right? If I work for dollars and I spend dollars at the grocery, it's because there is a network out there that agrees that that dollar has value, right? If I go to the supermarket, they know it has value and they're willing to exchange goods
mhm,
and services for that,
mhm,
and my employer is willing to pay me in it. And so we have this economy that built around this common consensus around the dollar. But if
yeah,
I go to Japan or Brazil, that dollar may not have consensus, right? The person I'm offering to buy a good and service may say, well, can you please convert it to real or yen or whatever,
mhm,
so that it's more useful for me here, because our local consensus is a totally different currency.
yeah,
And globally, the problem is that we have too heavy of a emphasis on the dollar, too little emphasis on local currencies,
mhm,
and this really affects global GDP. There's a lot of imbalances there, and the Federal Reserve has problems striking a balance between those things.
mhm,
It's called the Triffin dilemma. So ultimately, with these systems, you can create value networks that are interoperable, meaning the technology that underpins them has very little friction and very low switching costs.
mhm,
So what I mean by that is, let's say I go on vacation to Japan and I bring $10,000 in cash. The switching costs are very high. I got to pay, on the other end, somebody to convert that into yen, and they're not going to do that for free.
yeah,
They're going to take a fraction of the value to facilitate that transfer. And, it could take a lot of time. That's one example of where there's friction and there are switching costs to going from one consensus network to another in currencies. It's true in digital assets as well, but it's a lot lower. because they're digital and they're abstract and they're already basically on the internet. They're all global, right? It's not like Bitcoins are in a location, right? They live on the global internet. So already you've kind of crossed that barrier. And so I see very customized blockchains that people build for very, very specific problems. And then there are bridges that interconnect these blockchains, just like we have bridges that interconnect, email servers, right? If I'm going to send you an email, all I really care about is what's your email address. I don't care that you use Gmail or Yahoo or Apple or any company. I just care that you can receive my message.
Yeah.
I think we'll see the same thing with values. Say, hey, can you send me X amount of value, right? And I'll send it in the way that I want. Like, let's say I have dollars, but you don't want dollars, you want Bitcoin. I would send digital dollars. They would get automatically transferred into Bitcoin through, these providers. And then that would then arrive in your wallet in Bitcoin. So neither of us really had to compromise. I didn't have to go buy Bitcoin, and you didn't have to you didn't have to receive dollars that you didn't want. We use these systems that are in the background to facilitate that for us at a very low switching cost.
Yeah.
Yeah. So this internet of value, I think, could really provide a lot of interconnectedness to the world and how we relate to one another.
Yeah. So there'll be multiple blockchains, which are like servers, right? Distributed servers. And you'll have your email that can go across, which is really your digital wallet in the future, or whatever digital wallet you have. All you need is an address or a way to send whatever you're going to send, whether it's a cryptocurrency or converting it to, or having an NFT in your wallet, which we've talked about in previous episodes. Is that kind of making sense?
Yeah, for sure. And, always go back to examples we're already familiar with. Like, why, if you're on Facebook, why can't you message someone on text? Why can't you message someone on maybe the Apple network or the Google network? There's a reason you can't message, not a technical reason. There's a reason, is because Facebook just wants you to message other people on Facebook. That's their
closed network.
Right? Yeah. It's a walled garden. So they want you in their walled garden because that's how they make their money. If you knock down those walls and you build bridges, and people can express either information like an email or a text, or value, all of a sudden it's very empowering to the people who participate in these networks. And now it kind of flips it on its head, where the networks really have to compete for your message and for your value, right? So instead of exploiting you and extracting value from you, they have to compete because they want you to come to their network.
Yeah.
And so they have to make it as beneficial to you as possible. One of the reasons Facebook has so much stickiness and no new Facebook has come along and taken it down is because the switching costs are really high. If you build your network on Facebook of your friends and family, Facebook did all the work of connecting all the friends and family to you, and then all their friends and families to them, and built this network that's very valuable. If you were to leave Facebook, you first would have to convince all your friends and family to leave,
here to the new
and then they would have to convince their friends and families to leave. So the switching costs are enormous. So the only reason you would do that is if the opportunity is worth it. By going to this new network, you're all going to benefit so much more than you're already benefiting with Facebook. Right? And so that's why the incumbents are remain incumbents, because they have very high switching costs, and the opportunity costs for somebody new can't just be incremental; it has to be big. And I think these value networks present that. If you were to leave to another network and all of a sudden you're an owner in the network and that network's appreciating very rapidly, and you're a beneficiary of that appreciation, you would do everything you can to get your family and friends to join in that appreciation and join in that value creation. And that might be compelling enough to convince everybody to come along. So,
the value. I think, this is the value, internet of value. This is what Web3 is all about. And you've seen it with the George Floyd, with the LGBTQ community, or the Asian community, or the Latinx community, and everyone fighting for their rights, right? Social justice, and a lot of social things going on, but really it's economic. I think it's just as much economic as it is social.
Absolutely.
Because when you have economic empowerment, you're not really worried about anything else, right? Maybe if someone's like, "Hey, you N-word," or something, like I'm gonna be upset. But at the same time, if I have my own, right, like I can build my own, and I could restore my community, and I could, be amongst my own and be amongst Santiago and everybody else. I don't care. So like we're all human,
Exactly.
even if you're alien, like just don't like, eat me or something. But um all serious aside, I think that's where we're at. And like, for example, for the audience, right, there's a browser called Brave Browser. Their crypto token is BAT. And so I've been using it for about 2 years. And what they do is they pay you basically to view ads or allow ads, but when they block it for you, right? And so basically you're getting the value from it not compromising your data. And so like I probably made like $11 last month or something like that. Like just by like it just accumulates and it shows you how much data you've saved and how many ads you've blocked over time. And it's like it's really cool. It's really simple, and they've added a search component as well to like go after Google. And that's great because competition makes Google better, and it makes the other participants better, right? It allows Porter's five forces, right? The switching costs, but also like the barriers to entry. So when the blockchain's allowing for new competitors in this next revolution of technology to like compete and to find those holes, and we found the hole. Like these platforms like Google, Amazon, Facebook, etc. They own too much of the pie, and they're extracting value instead of creating value. Um, what are you crypto and blockchain is it's a new world. It's not an asset class. It's not an industry or a sector. It's a new world. Just like when people are like the internet, 95, or, in the 90s, or like emails are right. But like now everyone has like 5,000 emails in their inbox right now. And it still exists. What are you focused on in your company? Can you dive into your company? What made you want to start your company, and what are you all focused on in this Web3 world?
Yeah, yeah, I will, and I promise. But let me just address a couple of things you said because I thought they're
Yeah,
super important. I want to highlight.
yeah,
So, with respect to social justice and economic justice,
yeah.
I'm 100% aligned with you there. I think that what the internet has allowed is for prior imbalances that would have been unaddressed to be made obvious, right? Everybody has a cell phone camera. Everybody can record what other people's behavior is. And wherever injustices are present, it's obvious to the world now, right? It's not something you can hide or kind of discredit or not pay attention to, right? It's in your face. And that's very empowering, right? So we have this Web 2.0, the existing internet, which created these platforms where people can leverage,
Where you going?
and they gave them power, right? You could
Yeah,
post something on Twitter or Facebook and it would spread virally, or YouTube, and you could address things like social injustice, right? But economic injustice is exactly what Web 3.0 I think will address, is that
yeah,
economic injustice arises because some players of the game in a capitalist structure are very effective. They're very good. I mean, Amazon is exceptional. We all use Amazon. It
yeah.
provides incredible service to people.
Mhm.
However, it gets to the point where it's so large that it has a disproportionate power, not just on the market,
Mhm.
but on its supply chain, on global issues of where it gets its labor, the environmentalism around its products. It has a global impact
Mhm.
that is essentially has all these externalities, these costs to society that you don't see when that package arrives at your door,
Yeah,
right? And so those things are kind of hidden, and the power they exercise is very large in proportion to the value they're providing to society, right? So Web 3.0 is kind of breaking that apart. I don't think the next company to kind of beat Amazon is going to be a company at all. I actually think that the
Mhm.
way Amazon and Google's and Facebook's of the world are going to deteriorate over time, a very long time, is you'll have Web 3.0 decentralized communities that offer more value for their participants than the incumbents, and they slowly, you have like 1,000 of these communities all interoperating,
Mhm.
providing the same function that the large aggregators do, and slowly taking away market share, and then all of it once they'll collapse.
Yeah.
But it's going to take a process where first you have to build all the small pieces. You have to build all the infrastructure, the base layer that then people can come and build businesses on top of.
Yeah.
And then when they do build businesses on top of them, they can interoperate their businesses on a secondary layer.
Yeah.
And then all of a sudden you got this superstructure that is more competitive, more efficient, and more just than Amazon. And so it's going to be a long process, but that's what I decided to work on in my business. Is I want to be at the foundational layer. At Block Digital, the company I started, we want to build the compute infrastructure that supports a lot of these blockchains. We want to have the computation that is kind of agnostic to which use case. We don't care. We don't have customers. We support these blockchain networks. We keep them running. Like somebody's got to process these transactions, transfer the NFTs, transfer the Bitcoins. If you get into governance, transfer a vote, somebody's got to keep track of that. That's actual hard drives and electricity and buildings. Somebody has to do that.
Yeah.
And Amazon will never do that because it's not in their interest to do that. Not in their interest to fund networks that are going to grow, that are going to take away from their market share.
Yeah.
Right. So that's what I'm passionate about. I think solving the problem means first, if you're going to have this highway of value in the future, you need to build the highway. You need to build the on-ramps. You need to build the bridges, the roads. You need to build that base layer infrastructure, and then you can put the cars on there that are going to drive.
Yeah.
So that's what Block Digital does. We build compute infrastructure for Web 3.0.
Nice. For the protocols, correct?
Yeah. So some of our and sometimes we mine. They call it mining, but it's really proof of work hashing. It's part of that solving that double spend problem we talked about at the beginning of the video. We'll participate in that. Sometimes all we do is validate transactions. Other times we move up the compute stack. So we'll do things that are more complicated, like we'll transcode video. We'll store files on a hard drive, and we'll move up to gaming and machine learning and much more complicated kinds of compute. Because that's what everybody's using, right? People are using video, they're playing games online, they're watching movies, they're sending text messages to each other, they're sending money and value to each other. So we want to provide that service. And these things are all competitive, right? Like I don't try and go out and find clients. These networks, by the fact that they exist, they compensate providers, right? If you put your compute on the Bitcoin network, if you go put all your ASICs and you put it on the Bitcoin network, you can win some Bitcoin. And so the competition is incentivized by something that has value, right? And that's how the Bitcoin network works, is it awards miners a Bitcoin every time they win this competition in hashing, and then they get to earn the right to amend the block to the chain. And in that block are all those transactions. And so it's this kind of self-sustaining network. So, yeah.
So
Does that answer the question?
Yes, that's awesome. So do you all operate, what networks and protocols do you all help operate as a service provider?
Yeah, we're agnostic to a protocol. So we do use general purpose equipment. So we don't mine Bitcoin, because Bitcoin is I have some problems with the way that the hardware market's been captured. There's really like only two major manufacturers of Bitcoin ASIC hardware. And I find that very problematic, because it's kind of just getting back to what we were trying to get away from in the first place. Yeah. So, if you're centralizing some part of the network, I find that problematic. And there's economic reasons why we wouldn't do that. So we tend to focus on more general purpose networks. So things like Ethereum and other proof of work non-ASIC networks. And then we do things like video transcoding that has nothing to do with Ethereum. It has other networks and file storage, right? Without shilling any of those networks, I also hate to promote unless they do it on their own merits. We're agnostic to these networks. We'll support anyone that general purpose computing hardware can support, and that has a network big enough that's basically paying an incentive.
Mm-hmm.
So we don't make a value judgment, right? It's not our role to decide we like your network better than that network. We're trying to be agnostic so that this whole space can kind of grow, right? And whoever's growing fastest and has the best payment, well, that's naturally who we'll point our compute to, and that's kind of how it should be, because those ecosystems that are growing fastest, it's because they're providing their communities with that value, right? They're not growing fastest because through some artificial means. It's because people want their token, people want to do economic activities on the ecosystems, and therefore that growth is reflective of service. So we'll naturally point it to most profitable, most growing types of ecosystems. But we still would allocate to small projects. Like if a group of developers who's just starting out and they have a vision and they want to try out their network and they were to approach us, we would absolutely run their network, even if they're not a big growing network and maybe it's not paying very much. We would support them in their growth cycle. Early on, we wouldn't put our whole business on it, but we would allocate something reasonable so that they can experiment and grow.
Do you have a number of networks or projects you support currently?
Yeah, right now anywhere between 10 and 15,
Mhm.
right, is our goal. We're in our demonstration pilot phase now.
Mhm.
Nobody's ever done this. Nobody's ever kind of supported multiple networks at the same time on the same hardware. Usually data center providers or people who get into this, they really focus on one network. They
Yeah.
kind of put all their eggs in one basket. And we've done a 180 from that. We've said, no, first of all, nobody knows who the winners are going to be. This is like 1995 with the internet.com, right?
Mhm.
And nobody knows. So why would you put all your eggs in one basket at this point? You really want to focus more on cultivating the internet of value than on picking a single winner.
Yeah.
So
It's about the bigger problem, right? The bigger
yeah,
solutions, about everyone winning, right?
yep,
Whoever wins, it's up to you. But
that's right.
we all want the same thing, right? Because when we get competition should be perfect, right? Like the invisible hand. But when
Hmm.
someone corners a market and keeps it to themselves, which you should have your own ownership, but when you create a monopoly and oligopolies, which is just a few monopolies for the
Mm,
audience, there becomes right few at the top, a lot at the bottom, no middle class, no
hmm.
mobility in economic empowerment and freedom, and then you become like, the whole Robin Hood story, which
Yep,
we can literally
exactly right.
we can go into the Robin Hood app whole thing, but I want to talk about what you just said. Like we're in for Web 1, we're in the mid to late '90s, and you see like big protocols, general smart contract, purpose smart contracts like Ethereum, right? They're huge. People say they have a lot of network effects, which just means every developer, every node that gets on the platform and develops something new, like they get stronger, right? And they have a huge market cap, right? They can't fail. Do you think it's possible for big networks like them or Cosmos or Polkadot to potentially go like not be around forever?
Absolutely. I mean, look at AOL, look at MySpace,
Yeah,
look at, any Google Plus, right? It had Google and it failed.
yeah,
You can have huge networks with huge network effects
mhm,
and still fail
mhm,
if you are not continually driving to create more value for your constituents, the people who participate in your network,
mhm.
than the competitor, and the switching costs are low, which they are,
They are
that's
right.
the
Yeah,
key,
yeah, yeah, yeah.
then you will lose network effect. So there are no winners yet. No matter how big they are still tiny in comparison to some of the networks we see historically.
Yeah,
And the digital asset space is very, very small, less than 1.5% globally, right?
yeah,
So we are just at the beginning. It's like trying to decide between Amazon and pets.com. It's not going to happen yet.
yeah.
And I certainly wouldn't call a winner for Ethereum. I'll give you a perfect example.
This is lit.
Most Ethereum source code and the smart contracts and platforms built on Ethereum are open source.
Mhm.
So the switching cost for development is zero,
Yeah,
zero. When a developer launches a platform on Ethereum, anyone can come along and replicate that platform. In fact, we've seen it happen with things like Sushi Swap and all these other DeFi products.
yeah,
It can multiply like a cell division, right? In an organ. I look at these networks very much like organisms, that they kind of can grow and get to a maturity, and then they can die because they become dysfunctional somehow. And the other thing is, many of the competitor networks that are kind of coming on the scene that are not Ethereum, they don't have the problems of proof of work, and they have the Ethereum virtual machine built in, which means like a developer who built something for Ethereum doesn't have to do any extra work to put that same smart contract on this competitor network, because they use the Ethereum virtual machine. So that to them, one of the problems that Ethereum has is it with its current proof of work consensus, is that it's a victim of its own success. The more popular it gets, the more congested the network gets, and the fees rise parabolically. So when everybody wants to use the network, the cost to use the fees gets shared by everybody, if even a small number of participants are driving up the transactions. And that's a big problem, because what's happened there is they've socialized the costs of the network resources. So everybody has to bear it. So I'll give you an example. Let's say I wanted to send you some value on Ethereum, on the Ethereum network. Meanwhile, the network is very busy doing, let's say, a Uniswap or a DeFi type application. What will happen is, for me to send that Ethereum to you, I'm going to pay a much higher fee than I would have maybe a month ago for that same transaction, just because the network is busy. And that's problematic, because what does that have to do with me? Like, the fact that DeFi and Sushi and Uniswap, or all these applications are running, that's not bringing any value to me just to send you some value. Why am I paying those elevated costs? So that's a real big problem, and they're working on that. And it's incumbent on the developers to transition the network where that's not the case. Right? And they're working on it. They have a plan. But there's all these other competitor networks that their foundational layer is not predicated on that problem. They don't have that problem from the start. And they have, they're ready to go to run, right? So I don't think that Ethereum is the winner by any means, not even close. I mean, I love Ethereum. I own Ethereum. I mine Ethereum for Block Digital. And I believe that all the composability in Ethereum is extremely powerful. And it has the best chance right now of being one of the biggest networks for the foreseeable future. But by no means is it the winner. And it's certainly not immune to it in itself being disintermediated. So I love it. That's the best part. That's the best part of the space.
A lot of value going down. Are going somewhere else. Right. I don't know if it goes down. People just transfer it to another. They go cross chain, right? Which we could get into that if we want. They go cross chain to Cosmos, to Polkadot, to Cardano, even the Bitcoin network, which we can get into that. But very interesting to you put in that perspective of Block Digital, your company having this. Hey, we're trying to help everybody, which I think is awesome. Congrats. And just wanting to start, even the little guys that are just coming up. Solana, for example, is a general smart. They're same type of as Ethereum. They came out of nowhere, it seems like. And they raise a lot of venture money, but their fees are really inexpensive. They have a lot of TPS, which is just transactions per second on their platform. It's like 50,000 per second. How were they able to do that versus Ethereum?
Centralization. Not that they are centralized, but their decentralization, which is this whole thing we've been kind of talking about this video, but not talking about. But decentralization is who has the power, who gets the right to validate something, who gets the right to governance. It's a spectrum, right? It's not like something is on off like a switch, either decentralized or not. No, it is a spectrum along the amount of decentralization and power sharing checks and balances that are built in. Solana just decided to make certain trade-offs. It doesn't use proof of work, for example. It uses proof of stake, delegated proof of stake. So that means that you can have a very small number of validators, maybe 100, who do all the transactions. And so that's how it gets to 10,000 transactions per second. Because you don't need to keep synchronized as many nodes, and you don't have a competitive framework for how those transactions who's going to get to validate the transactions. So all these blockchain systems, they have different trade-offs. There is no perfect system. Like Bitcoin is not perfect. Ethereum is not perfect. The developers of these things made decisions at onset and change the design as they go,
Yeah.
based on trade-offs. And there's always trade-offs, and it's a decision of the participants whether the trade-offs are worth it or not. I'm not going to go start using some of these decentralized networks to pay a dinner bill if there's PayPal. PayPal is absolutely centralized, but it doesn't cost me anything to send somebody across the table that I share dinner with PayPal money, like $50 for to share the dinner, right? So why wouldn't I use PayPal? Now, if I have a philosophical objection against PayPal because of their behavior, I would use a competitor network because I don't want to share any of my value with PayPal. I'm gonna kind of vote with my wallet, and I'm gonna make that payment with a competitor network.
Yeah.
So yeah, I think it's really about optimization and trade-offs,
Mm-hmm.
and then these kind of switching costs and opportunity costs, and that's how I look at it.
Yeah. So when you said, right, we talked about switching costs to go from Facebook. I got 15 years of history on here. Instagram, you see my life is on here. I might be an influencer. I make 100,000 a year. I make 50,000. I make 100 a week. Like, whatever my scale is. At YouTube, I'm 1 million subscribers. Why would I go to, from this centralized place like YouTube, which is Google, or away from Facebook? I have all my little friends and family on there, and all my pictures and my data. Why would I go to these Web3 platforms and these blockchain-based platforms? I don't care. I don't even know what this is. I just want to like have my cake, eat it too, like go brunch on Sundays and be happy.
Yeah, great question. I'll tell you. Getting the rug pulled. So you let's say you're a YouTube influencer and you've accumulated 1 million followers, right? And you finally made it where brands are talking to you, and you're making income off of it, right? Someday you might say something wrong by accident, or maybe it's taken out of context, and Google just unilaterally decides to pull your channel. What are you going to do? You have no power in that relationship, right? All the power in that relationship is with Google because they own the platform, they own the network.
Mm-hmm.
And so deplatforming and demonetization are two of the biggest problems with Facebook, YouTube, Instagram, etc. You have centralized parties who are making those decisions unilaterally. And even though they claim to have a fair arbitration process, right, where you can kind of express your grievance and try to get back on, you're still, you're hostage to that process, and they get to decide the rules.
Yeah.
And so that there's a strict power imbalance there.
Mm-hmm.
And so what decentralization does, it says, no, like I'm going to own part of the network, first of all. I'm going to monetize the viewers. I'm going to control the data.
Mm-hmm.
I'm going to be the one that directly benefits from the advertisers or the ads.
Yeah.
And that changes the power dynamic because you can't be deplatformed. Some of these decentralized platforms, you can't be removed. There's nobody to remove you.
Yeah.
So a very savvy influencer, somebody who's getting into the space now, would be looking at Web3 and saying, I have 1,000 followers now. I have 5,000 followers now. I can and should probably continue to build on YouTube. There's nothing wrong with that. But I also need to be building on these other platforms, because if YouTube ever pulls the rug on me, I have something else here. I have something that they can't.
Yeah.
And as the world progresses, more and more people will start seeing the value in that. So
that's crazy that within that we're so early that YouTube has hundreds of billions of hours, probably a trillion of hours of hours watched. Twitch, which is owned by Amazon, if you didn't know, now you know. R.I.P. Biggie Smalls. But they have probably trillion, who knows, hours watched on Twitch. Facebook, they own WhatsApp, they own Instagram. Amazon is Amazon, Alibaba is Alibaba. They're Chinese based, so that's a whole another beast we'd have to get into. And then we had Chinese miners leave. That's a whole other discussion. So we don't know what's going to happen with their freedoms. But blessings to China. But so it's funny how, and I'm just saying this because like in a decade, we could literally see new social networks, and maybe they're dispersed, like you said, right? Like, I guess from that, will there ever be a new YouTube, a new Facebook, a new, like these new, commerce platforms, companies, will they ever be that big again? Will you see trillion-dollar companies be formed, or are they fragmented?
Yes. Yes, I think we'll see trillion-dollar companies still.
Mhm,
But I also think we'll see massive fragmentation, and I think we'll see an exponential growth in value creation
mhm,
as people are able to express value in the manner they so choose,
mhm,
are able to interact with human beings globally. Think
mhm,
about how much friction there is for you to interact with someone in the Philippines
mhm,
or Brazil that you don't even know. Even having Facebook, even having the internet as you do now,
mhm,
think about how much friction there is in being able to do that. There's massive amounts of friction, and as we cut away at that friction with this technology, the ability for people to express value will rise exponentially. Now, I'll give you an example. Let's say I feel for whatever reason I want to invest. Like I was born in Colombia, I told you. Maybe there's a town that I think there's just some really smart kids there. They don't have much opportunity, right?
mhm,
With smart contracts, you could have a kind of investment fund that people around the world could buy the tokens, and that token could essentially buy the diploma for that kid, right? That's the graduation, and fund
yeah,
their education. And when they get employed, that loan would be paid back through their wages, right? It would be paid programmatically through smart contracts to all the people around the world who helped fund them, right? I mean, that basically that's decentralized finance, right? That's the idea that we can invest in each other as human
peer,
beings,
true peer to peer.
peer to peer, without having to go through centralized institutions, and that who extract most of the value. So to me, that's the promise, right? That you can, as an investor or as a recipient of that investment, connect with other human beings in the world and create value. So I think we're looking at just the tip of the iceberg. I
Oh,
think it's going to be more,
yeah,
it's going to be massive and bigger than anyone can imagine. And it's the use cases that nobody can even think of right now.
yeah, that's
That's where the real value is going to be.
yeah,
So, yeah. So my question to you is my answer to your question is yes, I think there will be, still huge mega companies that do this very well.
yeah.
But I also think there'll finally be a counter trend to that, which is this interoperability between thousands of companies, maybe even down to the individual level
Yeah.
or to the decentralized autonomous level, that these things all start interacting and then yielding emergent products, services, goods that we don't foresee yet. So
Yeah.
very bullish. It's a amazing space to be in.
Yeah. Yeah. Super bullish. So you're basically saying that like right, this is the internet of value. So everyone has skin in the game. All 8 to 10 in 20 years there'll be like 10 billion people on the earth. So you're
Exactly.
saying everybody from birth. I own my birth certificate. It's on chain, right? I have the rights to my medical records. It's on chain. Hospital, if you want to get it, you got to pay up. Or
Hmm.
my education, literally someone could help me get educated. Schools are in jeopardy.
Hmm.
Banks are in jeopardy. Government positions are in jeopardy because it's all individualized. You don't need a
Hmm.
centralized leader. Maybe you have a leader, but all their decisions are on chain. Or
Hmm.
even if you have a leader that's, hey, your county or your little city, big or little, like every decision he or she or they or him or whatever pronoun you want to use makes is on chain. And to be a public servant, you have to agree to this. And like maybe your spot, you just put your wallet in there or what, I don't know how it works. They have a wallet or whatever for that seat. There's so many things. And these are just things that exist today.
Exactly.
Right. So, um, do you think that government, Facebook, all these big Wells Fargo could be like, okay, guys, you got us. Okay, we're gonna decentralize somewhat. What do you think about that? You kind of said Amazon doesn't want to do that, but why wouldn't the Facebook say, hey, we're gonna open up the door so we don't get eaten alive?
They see the writing on the wall, but they'll try to extract as much value for as long as they can. I mean, that's their charter. I mean, that's the charter of any corporation is to try to raise profits for their shareholders.
Yeah.
And so as long as they have that programming, they'll try to execute on that programming as long as there's value to be had. The
Yeah.
question is whether they can maintain the same level of growth that they have now. And can they stop what's coming? I don't think they can stop what's coming. They can slow down what's coming. They can put a lot of roadblocks along the way.
Yeah.
But this is such an inherent feature of the technology that it's really just delaying the process. The best they could do is delay. I
Yeah.
don't think they can stop it because it's a conceptual leap. It's like trying to say that we discovered fire and you can't use fire anymore. Like you can't like just, it's such an important step in how humans organize themselves, especially globally, that it doesn't seem likely to me that they'll be able to stop it.
Yeah, everybody wants value, right? Like once people realize, like, oh, I could, like, Brave is a perfect example to me. Like it's so simple. It's like you could literally make money by just using it. Like, yeah, it's fractions, but like, yeah, I made 11. Why wouldn't I want $11? Like,
Yeah. To
versus,
do something that you would have otherwise.
yeah, like I'm always on the internet. We all live on the internet, so it's
Yeah.
like, why not? And my data is protected, and I can choose the settings, like of what I want to use, and I can choose a search engine I want to choose within the browser. Just that's a very simple, small example.
Oh yeah, I mean, data is the new oil,
Yeah.
and all the large corporations, all the large investment banks, all the large ISPs, all about data. In fact, they will give away services for free going forward just for the data.
Facebook.
People like Goldman Sachs are into it. Apple, Facebook, all the medical companies that are medical history, the consumption from supermarkets, all visas, all of these big institutions understand that the values in the large treasure troves of data that they can then mine with machine algorithms,
Yeah.
machine learning and AI to try to get insights on better ways to sell, where's the best bang for the buck, what are the best products to continue to build, massively valuable. And so the aggregators, Amazon's, Facebook's, Google's, they understand that getting all this data, monetizing it, and then getting insights from it is their business.
Yeah.
It's not really connecting you to your friends and family or sending you a package.
That's the setup. That's the play.
That's the play.
The alley-oop for the dunk. Yeah. That's
But
awesome.
we create that data. That's our data.
Yeah.
Right. That's our behavior patterns. That's our consumption choices. And the problem is that we choose to use their networks because we don't have an alternative. But if were we to have an alternative, we get to be the benefits of both being owners of that data and getting insights from it, and getting the service or good product that the network. So
sounds like fairness to me.
yeah.
Equity. I'm about to say something. What do you in terms of the fairness, in terms of value? I wanted to ask about data. How early, like, where do you think we are in terms of data? We've been hearing about it for probably like at least like midway through last decade. The teams like data, AI, but now AI is like kind of in the business world, like everyone talks about it. In machine learning, where do you think we are? Like how well we use machine learning and AI, and just the next computing power. How far along do you think we are in like really optimizing data?
Well, I'll just kind of break off the we part. I think at the corporate level,
Yeah.
corporations that don't use machine learning
Mm-hmm.
and AI methods are going to be disintermediated by corporations that do, because they'll be more nimble, they'll be more efficient, they'll have better products, et cetera. So it's an imperative that companies adopt this technology, whether they like it or not, and understand how to build it into their existing business models. On the other hand, though, there is a lot of hype around machine learning and AI and what it can and can't do. There's a lot of problems with the pedigree of the data. There's a lot of bad data that's incorrect, or has biases in it. There's a lot of problems with the algorithms, which are built by humans and therefore express biases in those algorithms.
Yeah.
So it's not a done deal. It's not like a no-brainer that machine learning is done and where it's a package that's ready for mass consumption. But it's an ongoing thing, and I think that eventually it will trickle down to the individual level, where we'll all have AI assistants that help us make better consumer purchases. You know, like, why do I go to Amazon? Because it's easy and it's cheap. But if I had an AI agent that could find that exact same product for me cheaper, maybe
Somewhere
that a
else.
lot somewhere else, and maybe aligns more ethically with how I want to buy products, and present that trade-off. That's what machine learning could do, right? Is a recommendation engine that says, "Hey, go over here. Yeah, maybe you'll spend 25 cents more, but maybe they use solar panels for their factories. I don't know, something like that, right?"
Yeah. Or like, hey,
So
yeah, I want to buy black, or I want to buy Colombian, or
correct,
yeah,
exactly. So you
yeah,
could program in your preferences, and then the friction would be eliminated because you have these machine learning algorithms running for you to go find the best optimum solution, right?
yeah.
So I think that's what's going to happen, and it will basically distill as the costs of these solutions go down. It will eventually distill down to where retail can use them, and
Yeah.
you'll see that in medical research too, right? As the cost of genomics and stem cell research and CRISPR and gene editing, as those things go down, it'll be more accessible to the individual,
Mhm.
and therefore they'll be beneficiaries of it. So that's kind of the trend with any technology, right?
Yeah.
Only a few companies used to even have a computer 40 years ago. Like, they didn't even have a computer.
Yeah.
So as time goes on, now everybody's got a computer in their pocket. That's not,
Moore's
that's not,
law. Yeah.
yeah, yeah.
Um,
So
yeah.
you can't beat exponentials.
Yeah.
No business model can beat exponentials.
Yeah. Adapt or die.
Yeah.
But
Yep.
I was thinking, we were talking, and my brain was going crazy. Like, in Web 2, it was great, but like, you were just a slave to the platform because you were getting nothing out of it. You were just being extracted from. But Web 3 is bringing liberation, um, hopefully, to everyone, and everyone in the future, and new businesses that will exist, and new communities that will exist. Of course, slavery is a big word, but kind of is. I think there's different forms of slavery than just what we're used to in the past, and
I would call it exploitation, right?
exploitation,
Being exploited.
or yeah,
Yeah.
exploitation.
And you get something for it, but is it proportional to what you're giving? And I would say no.
Is it a fair deal?
Nope.
Yeah, yeah. So
Obviously not.
yeah, right. We wouldn't be talking about it, and a million other people.
Yeah.
Yeah, I was talking to a guy yesterday, Bruce the Goose. You could look him up on Twitter. He's an NFT guy. Like, was a farmer, and now he like does NFTs for a living, right? Really cool story. Really creative guy, and just talking about this same thing, and how like it was liberating for him to be able to get his art out there, and he sees where the future is going. So it's like just one example of so many different things. Like, people in different continents and countries that have way less advantages than us will be able to have access to value, have access to these new financial rails. And I'm super excited. Since we all are about the future, where do you see,
Well,
we will say, you can go.
wait till you see video NFTs that
Yeah.
are about to come out and that are encrypted,
Yeah.
meaning only the token holder can see it. And if they sell it, the algorithm changes the encryption, so the new owner is the only one who can see it. The old owner's key doesn't work. Think
Oh,
about what that means when you have a piece of content that somebody created that is monetized
yeah.
and that is encrypted, and that the blockchains keep track of who the owner is at any given time, so that only they can enjoy it.
Yeah.
It's basically like virtualizing like a Blu-ray, right? We used to remember Blu-rays and
Yeah.
DVDs and discs.
Yeah.
If you bought a Blu-ray, you could go sell it on eBay.
Hmm.
But now, if I buy a movie from, say, Google Play or Apple, I can't go resell that movie,
Yeah. They own
right?
the rights to it.
They own the rights to it, and in fact, that movie can be taken off my library because I actually only bought a license to it.
Yeah.
So that license has certain conditions in it, and if they choose, they can deplatform it, right? This is the problem. Some of these video NFTs are basically saying, hey, you've got this blockchain enforced piece of content that you bought.
It's
If you
yours.
want to go sell it on a secondary market,
Yeah.
you have the right to do that because nobody can stop you.
Yeah.
And when you do, there's even structures where you can have residual value into perpetuity. So if you make a movie, you and your friends make a movie, Right now, once you sell that movie to the studio,
It's there.
you may be able to negotiate residual value to perpetuity, but maybe not. I mean, we just have a case right now with what's her name, who played Black Widow in the latest Marvel movie.
Yeah.
She's suing Disney because Disney decided to release the video concurrently on Disney Plus, apart from the movie studios, but they're not sharing that part of the revenue with her. Now, maybe that was or wasn't in her contract, but the point though is, who's deciding where the residual value of content creation is going? It's the people who own the platform.
Yeah.
It's not even somebody as famous as the actress.
Yeah.
Right. It's someone who you would think would have all the bargaining power there. Even she can't. Right. So this is my point, is if you have a blockchain enforced type smart contracts that do this, you don't have to worry about that asymmetry in the power and the bargaining. And so you'll be able to derive a lot more value, and that's true with NFTs. It's going to be true with video and all content. So, yeah, it's going to be amazing, I think.
Yeah. Where are we at in 2030 with all this?
2030, I can't even imagine. I mean, let's see, that's 9.5 years from now. I have no idea. I think a lot of autonomous vehicles, a lot of drone delivery. Probably Amazon will be even bigger. Maybe antitrust action in a big way by many governments. Definitely digital assets will continue to grow exponentially. And we're going to see thousands of blockchains that really are just a technology tool. Like, we don't talk about TCP/IP packets on the internet. Nobody cares. Yeah. Nobody's going to care about blockchains in 10 years. Yeah. They'll be abstracted away into systems that people do care about, that provide them services like, help them monetizing their data or their content. Yeah. We're just building the base layer here right now.
Wow. So we are really early. Goodness.
Very super early.
But you think it goes faster though than Web3?
Absolutely.
It'll
accelerate. Yeah. I mean, because it's naturally inclusive, first of all, right? And it's going to include that many more human beings in wealth creation. And it's naturally, it has this kind of engine where it motivates people to get other people, right? The incentive systems that are being built drive network flows into these networks. Right now, that's only expressed in the price. Like, people get into, like, why I got into crypto. Wow, the price is great. I'm going to be invested in it, be, a millionaire, right? Yeah. But that's just one type of incentive system that these systems are experimenting with that encourages people to grow. Others are demonetization, deplatforming, monetizing your own data. There are all these incentives that are going to be built that are going to convince people to come to those networks. And that is going to grow exponentially in a way that the incumbents just can't offer. It's not like Facebook's all of a sudden going to change their mind and say, you know what, we're going to share all the ads that we show you. We're going to share the revenues from those ads with you. I don't see that happening anytime soon.
Did they even do that? Would their shareholders even let them do that?
They can do anything they want. They choose not to do that.
Yeah. Shame. Well, see him in the grave. But we'll see. It's up to those people in Melano Park, wherever they're at. So this is awesome. Where can people keep up with you? Do you have some wise words for the people before we end?
Follow your passion in this. It sounds like totally cliche, but if you really are passionate about this space in particular, reach out to other people in the space, exactly like you did with me, and engage, and then find where you can contribute value. Find what you're interested in doing. Yes. And there's so many areas in this. There's in marketing, in technology, in economics, in game incentive systems, content. I mean, it's just endless, right? Yeah. So find what you're passionate about, and figure out how you can provide value to others, and you'll do very well. You'll be very happy, and you'll wake up in the morning wanting to go to work. Not like I used to wake up in the morning and be like, it's Monday. Now I just I can't wait because I want to keep going. I see all the opportunities. So
every day's Friday.
My advice. Yeah. So.
Cool. Where can people keep up with you?
Oh, definitely Twitter. I'm active on Twitter. Sometimes snarky, but I try to follow everybody who follows me, which is like impossible, but
Yeah.
I want to hear what people say because this stuff is really all about communities. All the values in these things, the digital asset space, cryptocurrencies, blockchain, they're
Mhm.
nothing without people, and
Yeah,
they're run by people.
exactly.
So that's where the value is in people.
Yeah. Cool, Santiago. Thanks, big bro. This has been awesome. We're definitely gonna talk again soon, and I'll put your Twitter display name in the notes and on the video.
All right. Well, it was a real pleasure. Thank you for inviting me to your show.
Yeah.
I hope I'll be on again soon.
Yes, you will.
All right.
Thanks, man. You have a great one.
You too.
All right, peace.
All right. That was great.
Yo, Santiago Velez, Colombian. He's awesome. Big bro out in Massachusetts, just outside of Boston. I will drop his Twitter name below, even his company, Block Digital. Check it out. If you have any questions, just reach out to him on Twitter, mention him, DM him, reach out to me. I always put my Twitter name below. Follow me too. We went through a lot of things just conceptually about Bitcoin, about blockchain, about historical, economical, social implications of what's going to happen in the future, just as everything does. Nothing stays the same. You don't have to stay the same. Grow, figure out where you want to add value in crypto and the blockchain because it's going to be in every part of our lives around the world. Hey, we're breaking to the future, all things future, crypto, blockchain, healthcare, transportation, travel, space, EV, cannabis, psychedelics, everything. So stick in, breaking gang, share this with your loved ones, your friends, and your network. I'm out. Peace. Love you guys.